Okay, you guys are good to go. Sorry about the delay.
All right. Ken, do you want to run this until we get Mike on board?
Sure, we could do that. All right, to call the meeting to order. It's like 8:33. And I know Mike was waiting on us here. I just spoke with him on the phone. So it looks like we have Mr. Blewett and Mary Schlitt present. Any word from Gigi?
Gigi needs to be excused.
All right. I see Mike there.
Perfect.
Mike's about to interrogate somebody in that room.
Thinking about it.
Mike, Mike, can you take over for the agenda?
Sure can. Going to call the meeting to order at 8:34 a.m. Looks like we got everybody in the room, almost everybody, right?
Yeah, Gigi is excused, please.
Okay. All right. Note of agenda changes. I'm seeing none. Move to approve the agenda.
Motion to approve the agenda.
I'll second.
All in favor?
Aye.
Aye. I have no announcements. I don't see any public comment. Does anybody out there have public comment?
There is no one here.
Seeing none, all right. Move on to our presentation. See, we have Jeff in the room. Jeff, you want to take over?
I will. Thank you. And thank you for putting this together. Like Mary said in that email, hopefully we're in person sometime soon, but here we are. And you guys have the reports. Mary, you're able to get those out to everyone so they have this deck in front of them.
Yes.
That's correct. Yeah.
Perfect. So it was a good quarter. It was an eventful quarter. There is no question. Again, we find ourselves here in May, looking back at January through March activity, and there's a lot to unpack. But at the end of the quarter, it was a good quarter and it was a good year. Historically significant, certainly. I mean, we saw wide vaccine distribution. We saw an event at the Capitol, new president, Tom Brady won the Super Bowl. There was just a lot going on. So if you flip and look at the inside of the first, so if you're looking at the asset class returns, this usually tells a story, and it does so again. So on the far right in the year-to-date column, again, it's risk on assets leading the way. So mid cap, small cap, real estate did pretty well. Large cap stocks did well. But if you go all the way to the bottom, government treasury bonds were down 13%. So it was a strange quarter in that equities did really well. Everything did okay except bonds. Bonds got hurt. I'll tell you why as we roll through this and sort of how it impacted the portfolio. So on page 2, looking at the equities, really good stock returns. I mean, it was just a cooperative market, a continued resilient market for sure. I mean, in the middle of all the events that happened. And if you had told me, and this is an apolitical statement, but after those Georgia elections that the market would continue to move up, I would have said there's no way. And it did. The market just rolled right through it. It didn't care. It absorbed the news and rolled forward. Historically speaking, the market wants a divided executive and legislative branch. We don't have that, and the market doesn't care. Just a resilient market continues to move up. So again, stock returns were good year to date. S&P 500 was up 6%. But what gets really interesting here on this page is the 1 year numbers. So if you go back to a year ago, March was the bottom of the stock market. So if you go back to the coronavirus pandemic, I mean, we had, I think it was the 3 largest point swings down in history, and they all took place in a 3-week period. So this report is after those numbers conveniently. So March 31st, if you look at the 1 year numbers on the S&P 500, up 56%. Small cap stocks, the Russell 2000 up 94.8%, which is just astronomical. So in a 1 year period, the returns were really strong across the board in the market. In the quarter specifically, you saw energy do a little bit better. All 11 sectors were good. So the news for U.S. stock market returns in March, January and February were good, A+. turn the page, if you would, to page 3, looking at fixed income, it's a different story. So your core bonds in this portfolio were down a couple percentage points, so 2%. So I don't want to overdo this, but you did see 10-year treasury rates go from 0.91% to basically 1.67% in the quarter. When you see rates move up like that on a 10-year treasury, you historically see negative returns for bond markets. And that's what you saw here. And that makes perfect sense. And really, at the end of the day, we're unwinding 20 some years of a bull market in fixed income, and sort of paying a small price for that right now. And to get through that normalization period, you're just going to have some disruptions in short-term periods like we saw here. So bonds were negative for the quarter to the tune of a couple percentage points. Flip to the next page, page 4, the U.S. economic overview. The economy's coming back. I mean, you see it, you feel it on the ground. You know, Q4 was up 4%. First quarter was up 6% annualized. 1.9 trillion, as you see the headline, fiscal package bolsters economy. They gave it a big shot in the arm, and the economy had a good quarter, and it looks like it's going to have a good year. I'll show you a little bit later what we're looking for in the year. Next page, international, page 5. International is a different story. I mean, international continues to lag the US, and this has been the case now for 10 years. Historically, you see periods where international leads, then the US takes over and vice versa. So at some point, we are anticipating this will flip, but it certainly hasn't happened yet. And if you're an investor looking around the world, you probably feel more comfortable with the US today than you do in international markets. But yeah, at some point that's going to change, and that's going to be the new narrative, but we're not there yet, certainly. Page 6, looking at the economic and market forecasts. You guys can read the numbers for yourself. But what's interesting is our target for the year is 5.7% GDP growth. So we're looking for a lot of growth even between now and the end of the year, even after a really good quarter. And if you look at the bottom targets, we're looking for increases across the board, except for international develop. We think that's going to be reasonably flat. We do think 10-year treasuries are close to where we expect them for the year. So we don't expect these 10-year treasuries to run up and get to, say, 4% this year. That would be really bad news for bonds, but we don't see that happening. Looks like 2.25% is probably going to be near the cap. And right now we're at about 1.7% for perspective. One interesting number on here, and I don't want to talk about this too long, is just the oil markets. I mean, a year ago, there were periods of time where there were negative prices for a barrel of oil, meaning that the producers were paying the transporters to take this oil off their hands in what was a completely upside down universe. And you see energy prices rebound, and now a barrel's back to $59, which is basically a normal figure for that. And that's where we expect that through the end of the year. Jump to a couple pages, get to the cash flow page on page 10. So for the quarter, the gain is $1.2 million in investment returns. Ending market value, $43,646,063. What's more fun to talk about is the 1 year number, again, after a very convenient March 31st dates on these reports, where the gain was $12,141,000. So just an incredible year. Goes without saying that January through March last year were a negative period, but here you're seeing the results after that March 31 stop date. So all the way to the right, since inception 2013, for us on this report, $21 million in investment gains. Started with $25 million in August 2013. And the next page, page 11, you see the 60-40. That's something that should be familiar to you. There's been a lot of rebalancing this year. I mean, stocks up, bonds down, pretty active, getting this back to where we want it to be. And that's true of every investment manager in the world. It's been a very active year in terms of rebalancing. Page 12, you see all of the funds that make up the portfolio, 43 million on the bottom, 15 equity funds, 4 fixed income funds. And the next page, page 13, probably the most interesting page in the report, year to date. So for the portfolio, quarter and year to date, obviously the same. So 2.93% for the quarter, beat the benchmark of 2.87%. And you start to drag your finger down, you see the returns came from obviously equities. It was nice to see large cap value stocks do well. and beat large cap growth stocks, something we haven't seen for some time. And we've been calling for that reversal, and it makes perfect sense that we did see it. Value stocks, I think banks, more blue chip names, older companies, large cap growth, think Amazon, Facebook, Netflix, Microsoft. So small cap stocks were the real winner again in a 1 year period, 87.94%. International dragging a little bit, but still positive. I mean, 3.3% for the quarter. And fixed income is where the negative numbers do start to creep in and drag on the portfolio for the quarter at 2.65%, but for the 1 year, 5.35%. The 1 year in particular, we're really happy with our performance against the benchmark. So 5.35 relative to 0.71. And this is a really strong endorsement of what's called active management. So you have passive management, you have active management. An active manager is a mutual fund individual or team that selects fixed income securities instead of just saying, hey, let's just buy this bucket or this basket. That passive management has really been a trend in investments really for the last 15, 20 years. And it's there to stay. There's certainly a place for them in a portfolio, but it's a really strong argument for active management in the fixed income space in volatile times. And it's paid off on the 1 year for sure. Questions on the portfolio comparative performance at all?
Nope.
Okay. And just the last thing I want to touch on is the performance of the funds themselves. Nothing jumps out as problematic. The funds across the board were pretty decent. You know, the Wells Fargo Growth Fund, as an example, catches our eye for the quarter. Just a 3-month period is being soft, but for the 1 year in the 13th percentile. And so these parenthetical numbers that you see on these next 2 pages, lower is better. So if it's 1, it's the best in its space. If it's 99, it's the worst. And you can see across the board, typically we don't get too worried about quarter performance, more interested in long-term, but it's a nice diagnostic to say if something's working or not working, and reasonably comfortable with what's going on, especially in the fixed income space, especially on, over longer periods of time. And so, to wrap it up, I mean, it was just another really good quarter. We've had a couple of them in a row. Again, added $12 million in investment gains through market growth over the last year for the portfolio. So it's been, patience has certainly paid off. And if you've hung in there as an investor, like this portfolio, it's worked for you. And as an individual, if you've hung in there and you didn't sell off in those February and March periods, you were rewarded. And that's sort of the name of the game of investments. That's it. You guys have questions? Anything jump out? Anything look goofy?
Not from me. Thanks, Jeff.
Hard to ask questions on Zoom, I know, but
Nothing looks goofy. It all looks really great. And that kind of leads me to be a bit cautious as far as how are we positioning ourselves to make sure that this growth continues, even the slow growth. I mean, 8% is phenomenal right now since inception too. So just my thoughts.
Yeah, and it's a good thought, and it's a feeling that a lot of people have right now, and that's where rebalancing is so important. And it's a very tedious and boring conversation, but without the rebalancing over time, and I would urge you to all look at your individual retirement plans too. It's a good time to rebalance, because that large cap growth stuff, the Amazon, Facebook, Netflix, Google has been sky high, and if you have large value and you didn't rebalance it over to get that 11% we saw in this quarter, you didn't get that. And that's where this active rebalancing makes all the difference in terms of risk. So that's sort of our secret sauce when it comes to investments is, hey, let's rebalance, make sure we're managing the risks appropriately for the fire and police pension. And it usually pays off. It just takes a little bit of time, but these have been good markets, no doubt.
And the investment managers that we currently have, are those going to continue on as we switch over to Principal? I mean, it was just a name change from what I understand for us. It wasn't really going to be a big personnel change as far as who's managing our accounts.
Yeah, I believe that is correct. Yeah, I think these managers are going to stay the same. Obviously, it'll be a different company, so there could be some changes. Just like at Wells Fargo, there will be some changes over time in terms of the individual funds. But yeah, it should stay relatively the same.
Great, because it's doing great so far. So Thank you.
Thank you. Anyone else have questions?
No, I don't. Jeff, thanks for the presentation. Good numbers. Thanks to you and your team for doing that.
Thank you. We appreciate your trust and your business. And if you guys do have questions, certainly know where to reach me, but that's all I've got.
All right.
All right.
Thanks much.
Hopefully we'll see you in person in a couple months.
Yeah, that'd be great.
All right. Thank you.
See you guys. Thanks.
Jeff?
All right. We'll move on to the consent agenda. So Ken, are you ready to read the regular minutes from February 23rd?
I am, yep.
Okay.
Tuesday, February 23rd, 2021. Called the meeting to order at 10:01. Roll call was Mike Archikowski, Mary Schlett, Gigi Gordon, Jeff Blewett, and Kurt Augustine, and myself. Motion by Schlett to move the election of officers to after the Wells Fargo presentation, second by Lamar. Motion passed. Announcements by chair, none. Public comment, none. We had a presentation by Wells Fargo. Investment portfolio for the quarterly report up to December 31st, 2020. Kurt Augustine commented the move to principal is still on track for fall of 2021. Total portfolio totals were 43,039,054. That was an increase of 4.3 million this quarter. Consent agenda, we had election of officers. Motion by Schlett to elect Archikowski as president and Lamar as secretary. Second by Gordon. Motion passed. We approved the December 22nd, 2020 regular meeting minutes. Old business, none. New business, we went over the financial reports as of January 31st, 2021. Total portfolio balance was 42,661,221. We had a quarterly pension enhancement account as of December 31st, 2020. We had realized a 11.1125% gain, resulting in an additional $83,523. We had an invoice by Van Overbeek, Mashad and Timothy for legal services. A motion by Lamar to pay the invoice for a total of $170.10. Second by Gordon. Motion passed. No public comment. No comment from members. Adjourned at 10:28.
All right. Thanks, Ken. Do I hear a motion to approve?
So moved.
Second? I'll second. All in favor?
Right?
Aye. Passes 3-0. No old business. We have new business in the form of financial reports. Mary, you want to brush up on that?
Yeah, so this is just updating the information that Jeff had given to us in the presentation, updating it through April 30th, 2021. Our cash is up to $98,131.90, and our investment account is sitting at $44,756,444 for a total, there's a lot of fours in there, portfolio of $44,854, almost $700. So the change for the month was an increase of 1.1 million. That was an increase of 21,000 in the checking account, which was 25,000 in employee contributions. And we had a $3,700 distribution to Gabriel Roeder for our actuarial update. And then the retirement account, the investments themselves have gone up 1.15 million. That was an increase of 4,800 in dividends and interest, 206,000 in those capital gains. Those are the additional funds that we received for the investments that were actually sold. We had payouts of 234,969 to retirees and beneficiaries, a quarterly administrative expense of 32,787. And then we're still holding some investments that we're currently at a gain of $1.17 million. So a total for the year already, we're 7 months into the fiscal year. We're looking at a net gain of $7.3 million. Again, I caution, I get nervous that things are going so well, but we're looking pretty good so far this year. The 13th check distribution is going out, or it went out the first week in May. So that distribution is not reflected in these figures yet. Any questions?
I don't have any questions.
Nope, not for me.
And
Great.
based on the we received today from Wells Fargo, I will update the enhancement account. We will take that quarterly gain of, what do you say, 2.93%, and we'll add that interest to the that 13th check account and start reining that in for distributions for next year.
Okay. Do we have an abundance of money in checking right now? Do we want to move that someplace else, or should that stay where it's at?
We do. When it gets close to $100,000, I do like to make a transfer over to the investments. So I will work on that hopefully in the month of June.
Sweet. Okay, thank you. Receive, review, and file.
Thanks, Mary.
Any public comment? Not seeing any, not hearing any.
Done.
Any comment from the members?
I am gonna let you guys know, I will be training somebody in as my replacement here in the next couple months. I am moving up to Director of Finance. So we'll have a new treasurer coming in very soon.
Motion denied.
You'll see me,
Thanks for the update. We appreciate it. We'll work well with whoever it is.
absolutely.
Anything from Ken?
Nope, nothing for me. I take it we're moving to do meetings in person here pretty soon again. I know we've been talking about that for a year.
Yeah, looks like we're slated for June to go to in person, but that remains to be seen.
Very good. And congrats to Mary for the promotion.
Congratulations.
Thanks, I think.
I want to adjourn. So anybody want to make a motion?
I'll make a motion to adjourn.
Second.
Okay. All in favor?
Aye.
Bye.
Aye. All right. Thank you, guys. See you at the next one.